Hello and good afternoon, everybody. Sorry for starting a couple minutes late here. We had some people calling in some technical difficulties. As you can imagine, in these uncertain times, a lot of people are logging in from home. They're probably more than likely, you guys are used to using Zoom as of late. Uh, Talk about quite a bit in escalation to. I'm curious if Zooming is now a verb. I have Mr. Ed Lyon here on the phone with me from Taxmaster Group, and we may have one other gentleman joining as well, Richard. But as of right now, me and Mr. Lyon are here, ready to present this webinar. It's been a bit of a crusade, over to say the least, for all of us, and to come out and to be able to illustrate some positivity. The timing couldn't be better now within both of our firm's business models. Kind of the way that investors and just Americans are living these days, and the way that we're thinking, and the way that we have always thought. I think we're breaking barriers from our traditional investing needs and wants to believing that there's not only alternative ways to invest, but there's alternative ways to live, and there's alternative ways that the economy is going to grow and how it's going to grow. And fortunately, in these uncertain times, we have some very positive news where you as the investor can really buckle down on what you have been used to and what Wall Street has told you as an investor is important for you, and really relook at the scope of what your overall portfolio looks like, what your legacy is going to look like, what your family, what you're going to leave for your heirs, and really how your future is going to play out. And we have a very unique strategy, and we have teamed up with Taxmasters Group and Ed to bring this to you. So I'm going to let Ed give a quick 411 of he's going to be, him and Richard will be more highlighting part two of this series on the overall strategy that encompasses your entire portfolio. And I'm not going to speak for him. I'll let him just give a quick 2-minute introduction of what Taxmasters Group does, and then I'm going to go into Beckstone Partners and this very, very impactful isolated market that I'm going to talk about, and how you can do it in a tax-free or tax-deferred state, uh, really developing your overall legacy and heritage. So, Mr. Lyon, I'm going to give the floor to you for a couple minutes. Let these individuals. We got a packed house here. I see them just flying on, and see what you can illustrate for us.
Terrific. Thanks, Tim. I'm excited to be here and talk about the topic. By the way, Rich is on the call. He's texted me. I don't know if you can promote him to where he can speak as well. I agree with you 100% in that coronavirus is creating a lot of upheaval, but it is also creating a lot of opportunity. If you think back to your high school history class, medieval Europe, it was the Great Plague that got rid of feudalism entirely by creating a labor market. We're obviously not going to have that great an impact with coronavirus, but it is going to create some specific financial opportunities, and it's going to create some specific investment opportunities. It's also going to reveal some of the weaknesses of the traditional Wall Street investment model and some of the ways where real estate just structurally solves some of Wall Street's problems. So Taxmaster Network is all about tax planning. Most tax professionals do a perfectly good job telling you how much you owe, and that's important. But they don't do a very good job of telling you how to pay less, which is what you really want. So there's a difference in the tax world between what you need and what you want. We live in an economy that is built around wants. All you have to do is look outside and see some of the ridiculous things that are for sale in our economy to understand that that's not something anybody needs. It's just something people want. So Taxmaster Network and our tax masters fill the gap between how much you owe and how to pay less, which is what people are really looking for. We don't do tax returns. We don't do accounting work for people. We work as planners and advisors, and we help people accomplish their investment goals in a tax efficient manner. This is really important. A lot of people let the tax tail wag the investment dog. The goal is not just to pay no taxes. I got a great plan for paying no taxes. Be invested in the stock market when coronavirus hits. You won't pay any taxes, but you won't have any money. So I think this is a terrific 1-2 punch. Today, you're going to talk about a terrific investment opportunity. And in part two, we're going to talk about how to accomplish that investment goal in the most tax efficient manner, how we can take advantage of Beckstone's opportunity in the most tax efficient manner.
Excellent, excellent. I believe Richard's on the line as well now. Rich?
Yes, no, I echo those sentiments. I think that the big issue that we see today is they're frustrated with the same result. They keep doing the same thing but expecting different results. So, as an independent planner, we focus on letting our clients know all of the opportunities. Certainly, what you're going to be discussing today is an integral part of any well-balanced portfolio, and then adding the tax layer on top of that is the 1-2 punch that allows people to just keep more money in their pocket, which is really the essence of what, why people are investing money.
Excellent, excellent. Well, thanks, Tax Masters, and I know we're going to have some color coming from you guys as well via my presentation. We're going to, some of it will be more like a podcast, but I'm going to give a quick intro to Beckstone Partners. Beckstone Partners is located. I'm here in downtown Des Moines, Iowa. Fortunately, I am in the office, in and out. We've been, of course, children out of school, and kind of learning the trade to being an educator. And it's man, I will tell you what, teachers and the patience that they have, God bless you all, because
Yep.
teaching children, and especially, I believe all the guys on the call right now can agree, the way that they teach math today isn't the way that we learn math. And then learning to educate math in a different way has been challenging, frustrating at some points. But I do understand. I'm starting to understand it more. They're trying to, bring in some real life scenarios when it comes to math. But man, it's a different world out there. But at the end of the day, thank you to everyone. But really, what we want to do is we want to be able to, just like tax masters, we want to be able to benefit investors from thinking differently. We got to think other. We got to think, what does the economy wants us to do this. Everybody wants us to do this with the market. Everybody tells us we're embedded. We wake up thinking stocks, bonds, mutual funds. This is how we're going to create our overall wealth strategy. I'm going to make my money in the stock market. Well, the true wealth has always been made via real estate, and we all know that. We've heard it thousands of times, but honest, it's one of those things where if you do the correct due diligence and you understand the concepts and you understand the tax strategy of what you can do, especially in a retirement account, ladies and gentlemen, we're going to talk about a self-directed IRA today and how you can benefit from it. We've only 4% of the population has been taking advantage of this tax code that has been available since 1974. And Beckstone has done such a fantastic job of isolating markets and finding emerging in secondary and tertiary markets. We can purchase, we're in Des Moines, Iowa. Do we do business in Des Moines, Iowa? As far as, Beckstone Partners? No. And there's reasons why, and I don't need to get into that, but it doesn't meet our fundamentals of our due diligence of a true emerging market. And now what has been created and kind of paralleled off of the COVID-19 crisis is isolated markets. Where can I go that's isolated? And you're going to see a quick, story of how Beckstone has really gone out and found an emerging market that subsequently, out of, I'm going to say there's pure luck within this, pure luck within our due diligence of finding this emergent market during this crisis. It's been isolated and it's actually booming. And we're going to go through that. But we are your true evaluator. We are out there. Again, we've done business, 14 states, 40 cities throughout the United States. We understand what really drives a market. Our team is constantly analyzing, talking, within the industry. We look commercial downward to now. What we do is purely based on individual uh, single family homes, duplexes, quads that investors are investing in within their retirement account. This isn't a fund. This isn't a tick. This isn't a group investment. This is your retirement account, or outside your retirement account, whatever it is. 1031 exchanges. We just completed 2 of them last week. It's really what makes sense to you. In all of our properties, every single property has been approved for non-recourse financing. You are able to actually get a loan, but it's not a traditional loan. It's a non-recourse loan. It's a collateral-based loan, and every one of our properties has a industry-breaking rates, and it's already approved. We're not they're not pulling credit. They're not looking at you as a borrower. It's already approved because it's a collateral-based loan. And the interest rates that we have, it's no points. It's a loan that's in there, and we already have the insurance, taxes, everything is there. Fundamentally, what this is a complete passive solution where you're getting pure contracted cash flow every single month on a net figure. Now, we can discuss that later when we go through the numbers. And if you want to hear it, the horse's tail from somebody else, you go to our website, beckstonepartners.com. You're going to see client testimonials right on the website. And I believe that one of these gentlemen are actually on this webinar right now. They're at the bottom of the screen. But this is the complete story of how these investors got to us. Again, this is just a model for success to really secure and protect and be able to double down on these markets. Because again, with us, you're able to increase your investable dollars over 2 times your money. What that means is your down payment plus your leverage amount. You're making money on 2 ways on this investment. You're making money via pure cash flow, right? And then in these isolated emerging markets, you are making, money on appreciation. I know it's a crazy word to say in these uncertain times, but it's happening. This is funny. The last webinar, I was looking back at the slides, February 26th. I looked at the slide, the fear and greed index and the fear and greed index. What does this even mean? What is driving the market now? Fear, greed, fear, greed. What this is media is driving the market, right? All of us, there's a lot of people who probably invested in airlines, beginning of March, thinking that, okay, this is going to be a quick out and I'm going to make a buck, put a chunk of change in airlines just to watch it deplete another 30%. What are we doing? It's no different than going to the casino when we're doing this. But who's making money? I have friends in oil and gas in New York City, and guess what? They don't care how much it is a barrel. All they make money on is volatility. You guys, we have to remember where technology is today and where the investors on Wall Street are making the money. They'll show the pictures of the traders on the floor losing their mind. But on the backside of this, there's an understanding to where the money is made. A lot of the systems with the quick trades that are happening that we don't have, and we don't have those investable dollars. They're making money. They're making a lot of money off of volatility. But are we? Is that how we want to lay in bed at night, risking the fear of tomorrow? Because at the end of the day, I mean, Richard, what are your clients saying to you? What are your clients, who are invested in stocks, bonds, and mutual funds? Where's their fear, and what can you tell them to take a step back and relax and be able to increase your portfolio over time by making intelligent acquisitions?
Well, it's interesting. Number one, I think investors are completely misled by Wall Street. Wall Street actually does not really want you to make money. They just want you to be invested at all times, and there's many different reasons. When the market's down, they tell you it's only a paper loss. When it's up, they tell you, hey, don't you want to keep making money? So their job is they're like a casino host. They just want you to keep playing. But I always go back and I ask people, what is the purpose of you saving money, investing money? It's so that at some point in the future, you can generate income that will replace the income because you're no longer working. So think about it. If you lose half your money in your retirement account, nobody wants to lose half their money. But if you lost it and you were 25, like, what do you care? You lost like $1,000. But imagine if you're near or in retirement and you lost half your money, would that be different? So people looking for consistency, and the way we help our clients design portfolios is that if you're going to be in the market, you have to be looking at downside protection. It is unacceptable to have a 35% loss in a month, but we want to isolate it. So we want to create income besides real estate, besides having many, many other advantages. Creates a stream of predictable income, and that's really what people want. And if you can carve that out, then hey, wonderful. So that's really the philosophy we found to be very, very successful. And I know I've spoken with you and your brother about clients that maybe weren't so excited about it, and then all of a sudden now it's like the greatest thing ever. So that's my take on that.
Right. No, fantastic. And I couldn't agree more. Is the contracted income that we can provide to you is incredible. And it's all about timing. It's acquiring and owning the asset. Again, media here. These are slides from 2 months ago, and where the market's going, and what people are saying then. And our investors are sitting back and they're collecting cash flow today and continue to, because this is really a philosophy that is based on how can the investors benefit from acquiring the right asset at the right time. And when we come out and say that we've cracked the COVID code, we really have. And here is a little bit of a snippet of kind of the last 2 years and where we are today and how we cracked this code. And again, out of pure luck, but it's finding the right emerging market. Without COVID and without this happening, this is again an emerging market. I'm going to show you why, and the benefits are incredible. We've been tracking this market of Hanover, York, Lancaster County, Central PA, really since middle of 2018. And the reason why we ended up there is the short end of the story is the Panama Canal expansion that opened in 2016 brought us to the mid-Atlantic region of the U.S. and really what we saw in the growth that we anticipated did happen. And now we subsequently in middle of 2018 moved west due to the extreme warehousing growth that was happening due to the Panama Canal expansion in 2016. And when I say the word warehousing, right, we all think, duh, right? Duh. I mean, I can only imagine the amount of, I was looking at the recycling cans Monday. Today was recycling day. And I'm looking down the street, driving to the office, and I have never seen the green buckets overfilled like they are now. And the reason why, Amazon and everything else that's happening. I mean, God bless the garbage men. I mean, think about all the people living
Seriously, those guys work hard.
Oh my
Especially,
gosh! But imagine the amount of pure action. I mean, they're not used to having families living at home, eating, cooking, eating every single meal every single day, and people aren't talking about that. But geez, in the recycling that's happening, and everything that's happening with the Amazon effect, I mean, that's happening everywhere. And where are all these goods going? They're going to warehouses. And we are in the midst of a warehousing growth here in central PA. But let's double down on that, guys. 2018, Campbell's Soup acquires Hanover Snyder's and Lance Chips Company. $6.3 billion acquisition in 2018. The jobs booming in this market, 2018, 2019. 2019, we saw, it was actually 2010 to 2018. They saw a slight decline, and then they saw this reemergence. So what we've had is a downward cycle, and we are going upwards. We saw 8.25%. Now that's not even back at par. So we're really at the start of a 7-year cycle here that can continue on forever, and I'm going to show you why. But guys, 2020 COVID-19 hits. Most markets throughout the United States are absolutely rocked at a standstill. Well, guess what? Campbell's acquires Hanover Snyder's and Lance for $6.3 billion. They are booming. Some of you investors that are on this call that have done business with us have seen the emails from me stating months ago, Campbell's Soup, man, it's gonna go, and then subsequently Yahoo Finance comes out. Not only Yahoo, not only Campbell stock, but their dividend yield and everything else is at a growth state. They are working. Our tenants are paying. Our tenants are busy. This market is completely isolated. We are in the snack food capital of the world. Now, all of us naysayers are saying, okay, well now maybe it's good, but what's going to happen when COVID dries out and people are going to be disgusted by this food? Well, great. They might not be eating it, but there's this inherited thinking. I can tell you, companies like Charmin, any toilet paper manufacturer, there's always going to be now an extra set of toilet paper in everyone's house at every time.
More than one.
Right. But people are going to hoard it, right?
Mm-hmm. Yeah.
No different than when Campbell's food goes on sale, when snacks go on sale, they're going to say, okay, well, this, that, and the other. Or the other thing is they're just going to purely get addicted to it. Your health food eaters are going to have this and say, wow, this is actually pretty good, or I can mix this with this. But once they use it, there's always going to be a backup. And that's what everybody's talking about, is that backup strategy. There's this Y2K times 10 thinking in all of our heads. This is embedded because guess what? 10 years ago, 20 years ago, Y2K times, we were never touched as much as we're touched today. Instagram, Facebook, everything else. I mean, your subconscious is telling you to do these things like it never has before. CNN, blah, 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 constantly. Everybody's delivering messages. Everybody's got an app. Everybody's getting an update. And what it's doing to us is changing us, right? It's, I had this conversation last night on the patio with my wife. I said, do you think that 20 or 30 years ago, when our parents were on the phones and we were, teenagers on the phones talking to our friends, do you think that they had the conversation? Do you think that we could get any closer to each other than we are today with the phone? Now think about it. Fast forward. I don't know if we can get any closer to each other than we are right now. I mean, the technology of having this peer call, but we are now embedded with this. So we have to think about these companies. We have to think about the way that they're shifting and how big warehousing is and how big snack food is. Now, what we also know is this isn't a housing market crisis. Guys, I mean, in your free time, watch The Big Short. Watch what happened. Educate yourself on derivatives, what was going on in Wall Street in 2004, 5, 6 that caused the housing market. to actually, be able to lend people 10 mortgages, no problem, be able to get this out. Right now, we're actually in a shortage of housing. I know it doesn't sound real because nobody's, it's not busy or hustling, bustling, but houses are packed, houses are filled, houses are getting rented. And what's happening is you have this forbearance system. Fannie's not, foreclosing. They're giving people forbearances. You have first-time home buyers that have made up a large percentage of the buyers in the country over the last 10 years that might not be buying their subsequent second home right now because there's not the right replacement for them. And imagine this. Imagine all the builders, developers, everybody else who for the last year, 2 years have been working on, ground development and bringing in infill and ready to go to the bank to say, right now, today, maybe they had a meeting on their books to go and get a loan for a new development. That's not going to happen. Everything else is going to be pushed out. But what will happen is inflationary rates will increase, the cost of supply will increase, and everything is going to meet a new. So we're going to see real estate prices all across the United States continue to grow, but subsequently in these isolated markets that we're in, we're going to see a huge amount of growth. And here's, I'm going to send out some slides. I'll show some slides here. This came out, this is April 27th, so this is yesterday. Fannie Freddie, mortgages forbearance not to be paid at once, relieving stress, making people at ease. That is supply that is not going on the market. We have a lot of people that say that there's going to be this huge amount of. Hey, Richard, one quick thing. I think your phone. Can you mute your phone? I'm
not even near my phone.
Okay, I'm getting some feedback somewhere. But
I'll mute myself, but I'm not even near my phone. Okay.
All right. Then we have the snack food capital of the world. Again, Hanover, PA. Here it is, documented, the snack food capital of the world, right here. And this is where we have property for sale to you, self-directed investors. Campbell's Soup, again, $6.1 billion per this article. Campbell's Soup just named a new president last month. This is Valerie Oswald. She is 47 years old, and you couldn't time it any better. You couldn't time it any better for Campbell's to have Valerie come in. She is a powerhouse, and she's coming in right at the time of the crisis to manage this. So she's used to growing companies ground up, and what she's doing here is she's going to be growing this division within timing of the COVID crisis. Guys, again, real estate firm expects coronavirus. This is the Wall Street Journal. I just got off the phone a little bit ago with a buddy of mine from Marcus and Millichap, who is definitely, we were talking, and he's, office is going to be where the bloodbath is. But, the conversation is what continues into those spaces. And no one knows today. No one knows the future of what's going to happen to office, retail, strip malls. But what we do know is warehousing is going to provide jobs. It's not about the overall, where am I going to buy my stocks? It's how I'm going to benefit from growth in these markets that are providing the jobs. This area has warehousing growth. It is incredible. It's within the, 5 major metros within a 3-hour drive. The New York Post has labeled this place the new Brooklyn. There's commuters that have been going from this area of the country where the cost to live is so much lower, where they can have a car, where they can have activity, where they can be close to family. You guys, the data is here. We saw a decline in this market over the last 10 years, but we're at this reboot, right? So we're seeing an 8.25% increase. We're getting back to par, but the replacement cost of the homes, the rehabbed homes I'm going to show you here shortly, are well below replacement costs, which with everything being slotted and pushed back for new builds to 21, 22, what's going to happen is this extreme undersupply, and we're going to see a huge growth in appreciation. And the markets that are going to drive it are these isolated markets, are these markets where the jobs are, because you have to have jobs first. Jobs create the demand for real estate, and with millennials moving in here, it is going to be the next 5 to 7 years in this run is going to be incredible. Market temperature is hot. Median home price 184,000, depending on the county. But guys, this is right in our hot sauce. This is where you want to be. You want to be in that median. You want to be where that first time, second time home buyer is going to be. Another market that may take a little bit of hit, which industry insiders are saying, it's the luxury market, which I do understand. I think it's just timing is everything, and you have, like Ed said, those needs. Well, the luxury market and the second home market and your tertiary, your vacation markets, those are all needs, right? Your median home price and where your job is, where your family is, those are going to be impactful areas to own, and you can own those tax-free or tax-deferred. This is a recent trip that Kevin just took out there, so I'm just gonna flash through those. Oot Snacks, we're hiring. We're in a colonial area of the states out here, where a single family home might look like a row house. Here's a current rehab that we have going on. Here's some photos of a rehab. So we go into these properties, and what we do is we try to keep the nostalgia of them. We try to keep crown moldings. We try to keep this craftsman build to our homes when we go through these rehabs. We want to keep the heritage of this area of the country, which people love and they're used to. They're used to being in Richard being from a New Yorker by trade. This is what you're used to. And you know how to live in these type of properties, correct? I know you're in Florida now, but you remember the days of living like this, correct? He's muted, so that's okay. But
I do remember those days, actually.
Right.
That's some attractive housing stock.
Oh, it's incredible. It's incredible there. And if you think about it, we're right at that median home price. And here's what a deal would. Some investors go out there and say, I'm going to buy in my IRA, not knowing that they could leverage it out. And they're going to go out and pay all cash. And okay, but if you're buying in an all cash position, you're not increasing your equitable stake in pure tangible asset, right? We make money in two ways. We make it off cash flow and income, and then we make money off timing of acquiring that asset and the growth of that asset. The economics behind that are really economics 101, supply and demand. And then the cost to build. Building costs are going up and are going to continue to go up. We're going to see, you hear companies, drywall manufacturers, National Gypsum, talking about, it's going to be kind of like '08, where in 2010, 11, 12, after '08, they had to make up for a lot of their lost revenue. And how do they do that? They increase their price, right? And where else are you going to go when housing's needed? Everything in real estate is trickle down, right? Trickle down. You have to have the cost to acquire the land, cost to build, the cost of labor. Everything that goes into it makes up the puzzle to what a home's going to be purchased at, because builders are in the business of making money, right? And bless them for that. They deserve it. But their costs are their hard costs, and you can't change that. So in an all cash position, you could be looking at a nice cash flow. You're going to get a little more annual cash flow when you pay all cash, because you don't have of course, the debt. But what does that do to the rest of your numbers? You're looking at an internal rate of return of right around 11% based on an all cash acquisition. That's at a conservative 4% growth when we're entering into this cycle that maybe you don't hit a ton of appreciation in your first 6 months. No one is. But who cares? It's about acquiring it today, and it's about owning that asset and being able to see those rents actually increase and have, Beckstone, every property that we sell has a corporate tenant from day one. Our properties are 100% tenanted. You get a 24-month lease, cash flowing out of the gate. You get net funds every month. Now, again, do you want to benefit from the new normal? Because the new normal is what is happening in this subsequent market. This is, we hear it all the time, the new normal. You want to be steady Eddie, correct, Ed?
I like being steady Eddie.
I hear you. Now, here's what it looks like if you use the same funds. You could buy 2 properties with us, and they even have money left over. So we're looking at, non-recourse financing on both of these. Again, approved. We close these deals as long as your funds are available, whether it's in a self-directed IRA with a custodian, whether you took advantage of one of our other partners' checkbook IRA and have a checkbook IRA account. We can talk about that. Or we have archived webinars on our website. We can send you one if you want the shortcut, whatever it is. But look at this, guys. You can have an annual revenue here that is increased, and your total internal rate of return is now up to 18%. And that's with less money out of your pocket. Again, talking about educators, this math makes sense to me. Less money out of pocket. You own 2 properties. You're diversifying, and you're seeing a 9% increase of internal rate of return. It doesn't take, and anybody who logged into this webinar understands that this right here is a win. This right here is essentially the Tampa Bay Buccaneers right now, right? This is what we're looking at. This is Gronk and Tom Brady teaming up together with 2 properties, getting an increased return. This is really a phenomenal thing.
So if you only buy 1 property, it's my Cincinnati Bengals getting Joe Burrow. But if you buy 2 properties, you get Gronk and Brady. Perfect analogy.
It couldn't be better. And I'm gonna go down to Florida and go with the Bucs. Because at the end of the day, guys, this is you have to be with the professionals that understand and thinking other, right? We have to look at it a different way. We have to look at life a different way. And we're essentially being forced to, but why not force your mind to get out of the thinking that, Wall Street's going to come back and Wall Street's going to make up, we're going to make ourselves up and we're going to make ourselves whole again. Well, at some point, there was indicators out there that you could have been a seller. Nobody's calling out anybody for making any decisions, but the sit back and hold and wait strategy versus the anxiety, the burden, the everything that rests on that is sometimes it's just too much. And sometimes you have to just say, okay, I made my gains here. Maybe I didn't make 20%. I made 5. Maybe I made 7. Maybe it's time I go get some solitude and have a steady Eddie investment that's going to increase my strategy. And then once I have that, or I'm working with, tax masters, speaking of football, I have a complete strategy. I have an entire playbook of what is going to make sense to my family, to myself, and what strategies I'm going to now encompass. I'm changing the way that I operate right now, so you might as well change it all. Is the way I look at it. Is you got to continue to evolve because we are in a complete involvement phenomenon, I would say, right now. And I don't know how many more analogies I can use, but at the end of the day, I'm going to give it back to the boys over at Taxmasters to give a quick highlight, and then I'm going to give our contact information, how to reach us, where to see more. And I urge you, go to beckstonepartners.com and watch those testimonials and just kind of see every testimonial's got a little different story on how they got here today. So I'm going to head it off to you guys at Taxmaster and kind of give a teaser, and then we're going to give everybody out the subsequent invite to our webinar. I believe it will be next Tuesday as well.
So I appreciate the opportunity to jump on in. Real estate, everybody knows, is the most tax advantaged investment. Certainly more tax advantaged than what you can get on Wall Street. You've got depreciation deductions. You've got opportunities to take a bunch of business deductions. That's not necessarily true when you're investing in a tax advantaged environment, when you're in an IRA or a Roth IRA environment. But those tax advantages are still important because what they do is they help keep up the demand for real estate. So you have a Wall Street crunch, you have stocks dropping. This is going to be a great time to get into real estate because a lot of people are going to be looking to get out of securities and into hard assets, into real estate. So that's that there's a tax involved in that transaction. So what we're going to do is we're going to talk about the relative advantages and disadvantages of investing in a traditionally taxed environment versus a Roth taxed environment. We're going to talk about opportunities to take advantage of the current state of the market to convert from a traditional environment to a Roth environment. We're going to talk about how the mechanics of those work and really give a framework for bringing a tax plan in as an umbrella over all of the activity that you're doing. So as I mentioned at the beginning of the call, the real challenge is not just paying zero taxes. The real challenge is finding the most appropriate investment choice and then making that choice in the most tax efficient manner. That's not something that you look at on a discrete activity by activity by activity basis. It's something that's best done under the umbrella of what we call a tax blueprint, which is a comprehensive tax plan. Many of you may have done a financial plan with a financial advisor or an insurance advisor. A tax blueprint is like a financial plan, only it is specifically from the tax perspective rather than the overall financial perspective. And we're going to talk a little bit about why now is such a great opportunity to do tax planning. And the hint, I'll go ahead and blow the secret, is that as an investor, you have two ways to put money in your pocket. Financial offense is making more. Financial defense is spending less. Right now, a lot of the roads to financial offense are closed off. There are going to be fewer ways to make money, and you may have less actual money in your pocket. Tax planning is the linchpin of financial defense. So if a lot of financial offense is off the table, as it is, you're going to want to find those opportunities where financial offense is still on the table, and that's what Beckstone is doing. And you're going to want to combine that with a strong defense. That's what Taxmaster Network does. So that's, this right now, the timing for this partnership is like chocolate and peanut butter.
Sounds delicious.
It is. Trust me. Trust me, there's nothing like sitting down to do a tax blueprint for somebody, telling them that we're going to guarantee a certain amount of tax savings and coming back and saying, oh, I'm sorry, we were wrong. We found 3 or 4 times what we were guaranteeing. And that happens routinely.
And you guys have well, we don't use the G word here, but you guys
No,
can.
you don't, but we do.
But it's a program. We hedge as much as possible. We have a corporate lease in place with the net return, but nobody has a crystal ball on real estate, and we're not a public company. We are not financial planners, not even realtors. We buy and sell what we own, but subsequently manage and do everything else. But yours,
Well, we're not basing what we do on future performance of a market, of a security, or of a property. We work within the tax code,
Right.
and we know how there is no uncertainty about how Section 469 of the tax code works in a typical case, for example.
Right.
There's no uncertainty in how the tax code works. So We do, when we do a blueprint, we do guarantee that we will find a specific dollar amount of savings or refund the client's money.
Mhm.
So essentially, the Titanic, if you read it 10 different times, it always sinks.
Yeah, I read it like 7. I watched the movie 7 times. You know, every time the boat sinks and the girlfriend cries.
Well, that's phenomenal, and really, I mean, guys, what we're getting at here is let's think other. Let's look at a different way. Let's look at opportunities that are calculated and isolated, and Taxmaster and Beckstone together are making a hit. We are busy, and I know you guys are too. I know you just got off another webinar here, Ed, and appreciate your time for jumping on, and Richard as well. All of you investors, and again, we do have a lot of questions, and we'll get through those. We'd like just to have you can call into the number here, 515, it's 515-442-47 or 67. Again, 515-442-4767. And that is my fault. Or you can shoot us an email, info@beckstonepartners.com. You can speak to Kevin or even myself. I'm Tim at Beckstone Partners. Kevin is KI at Beckstone Partners. And I'll be sending out the contact. Richard, you want to let everyone know your phone number here? I messed up.
Yeah, absolutely. Most of the time, people that we're working with now around the country, they just want we call it the coronavirus second opinion. People can you just look under the hood, tell us what's going on? So we'll happily do that for all the people that are on this call as a complimentary. You could reach us at 561-340-2667. That's 561-340-2667. That'll come right to me, and we could schedule, just look under the hood, take a look at what you got, make sure you're heading in the right direction, and how it's going to work together with multiple different asset classes, obviously including this unique opportunity.
Fantastic. Well, all of you, thanks again for jumping on this call. Sorry about phone number being wrong, 515-442-4767. And, stay safe. I know we hear it all the time. Stay clean. Be kind to everyone. Give everyone a wave. If you are out on the road, remember, even with the roads being clear, they're seeing a lot of accidents because they are so clear. So change the way you drive. Remember, the left lane is for the fast cars, and enjoy the rest of your day. And we will be in touch soon. Okay. Thanks, guys. Thanks for jumping on.
Thanks, everyone.
All right.
Appreciate the time.
Thank you.
All right. Bye-bye.